Hi, welcome to Russell Investments Market Week in Review for the week ending December 12th. My name is Alex Kuzler. I'm a senior portfolio manager based out of Sydney. And there's three things to really go through this week. The first, the big event for the week was the Fed. So they lowered interest rates by 25 basis points. This had been widely expected by the market. And during comments, Jerome Powell kind of indicated that they're towards the end of the rate cutting cycle. They're not looking at hiking rates anytime soon. But they think they've gotten policy to a closer position to neutral. And from our perspective, we think that's probably about right, especially given our global market outlook view that the economy is looking pretty resilient and should see a bit of a re-acceleration through next year, supported by AI capex, adoption of AI supporting productivity, and also the fiscal impulse from the One Big Beautiful Act. So looking ahead, we think we're towards the end of that Fed cutting cycle, and markets generally were quite positive on that news. So we saw equities a little bit higher and bond yields a tad lower in the US on the back of that. We also got the JOLTS report, which is very dated right now given the shutdown, and we're catching up still on the data. But there we saw an improvement in openings. So we're still in this environment of low hirings, low firings. That's probably the best characterization of the US labor market right now. But if we look at some of the more real-time measures of labor demand, so looking at job openings through Indeed, for example, they still look okay. So we're still in this environment where we're not seeing an acceleration in the labor market, but we aren't seeing any further deterioration. I think the second thing that was really interesting is we actually got two companies reporting earnings this week. So Oracle and Broadcom, very central to the AI thematic. You recall a couple of months ago, Oracle's stock price had a huge run after the announcement of a deal with OpenAI, and it's given back a lot of that. In fact, it's given back all of those gains since that period. During their press conference, during their earnings report, we saw an increase in capex. So the capital expenditure for the quarter was much higher than the market had expected, and the indications for future capex had also increased. And revenue was a little bit softer, and I think this is a really important dynamic as we head into 2026. Is the market has been very focused on capex numbers. As we look ahead, there's also the question mark about what kind of revenue the companies generated from this. How are they monetizing this investment? And that's going to become a thematic that will probably become more apparent through 2026. So Oracle missed, and then Broadcom had a small beat on Thursday close. The stock was at about 3.5% after hours. So a bit of a mixed picture there in the early stages of corporate earnings around AI. The final thing was in Australia. So one of the things that has been really notable, especially living in Sydney, has been Australian bond yields have risen quite aggressively in the last 2 months. And the spread of Australian 10-year bond yields above the US 10-year is close to 60 basis points, which is towards the higher end of the last 10 years. A lot of this has been driven by concerns and expectations that the RBA, the Reserve Bank of Australia, is going to have to raise interest rates twice through next year. We think that's probably a bit of an overreaction from the market to a couple of inflation prints. Right now, Australia's inflation prints are they're quite noisy with some government policy influence price changes around electricity and water flowing through. And so right now we think that's actually Australian bonds are still really attractive. They actually look for one of the cheapest markets in terms of valuations. But spread has widened a lot, and so from here, probably a bit of nice asymmetry. And as we look to next year, you can't rule out one rate hike, but 2 rate hikes is pretty unlikely in our opinion, given that the labor market is still in a fairly it isn't re-accelerating. We got the labor market data this week that did show that we aren't seeing a re-acceleration in labor or wages. So with that backdrop, we think that the potential for the RBA to stay on hold is probably higher than the market is anticipating. And so there's a bit of asymmetry there. With that, I might leave it there, but thank you for your time. Thanks for listening, and we'll speak to you soon.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.